It's a great way for the Senate. And one thing that's would be useful for people to know is that while there's tax reform ideas that are out there and plans that have come from some people's brains out there, this is the most data-driven, highest financially inspired tax reform that has ever been conducted in the history of the United States. So $22 million of independent third-party research went into this. And what that looked like was dozens of many of the country's most brilliant PhD and economic brains went into creating this. And the charge was create a plan, a piece of legislation that could actually work, make sense for the federal government, be simplified, and generate and raise as much or more revenue for the federal government than we currently have. And that's what the Fairtax plan is, and that's what it does. So we talked about this idea of simplicity. We've got 131 pages. You know, it's like you could read this thing. And simple is better in many cases, and in this case, it just really makes sense in so many ways. So we've got this concept right now with our current tax system where it punishes growth. Now just think about that for a second. The more money you make, the more the government takes. So at a certain threshold for individuals and businesses, they would get to a point where they go, yeah, like it doesn't make a whole lot of sense to work a lot harder to make more money, because based on the amount that the government's going to take at higher income levels, you know, the actual net to us is marginal. Like the return on the additional output, the effort in the investment, like it just isn't there. I'm as an executive coach and somebody who works with small, medium, and in some cases enterprise corporations, I promise you that what I just shared is absolutely true. You're looking at people who are earning millions of dollars a year, and when we look at growing their business, undoubtedly what always enters into that conversation is, well, does the additional effort to make more, is it actually make sense? And when they do the math and pencil it out, in many cases it doesn't. You know, these are people who are really driven. So we want to have a tax system that incentivizes what we want. You know, what we want is expansion. And when we have unlimited expansion, when we have no constraint on expansion, that is a good thing for the economy. Like really good. And we'll talk about that specifically. So how does this come to pass? Well, the fair tax is a consumption tax, right? So we tax on spending, not on what is earned, and it eliminates all federal income-related taxes. And as you see in parentheses there is sister legislation that would be introduced that would repeal the 16th Amendment, which is Congress's ability to tax income. So yeah, it's like, man, that's it. It's fully transparent, no loopholes, like really simple. One tax, consumption tax on all new retail goods and services. So you can get your mind around retail goods and services, but to be a bit more specific about it, the tax rate is 23%, and that shows up on receipts. So here's a couple of examples for you. You go to the mall and you go to the store to buy a pair of designer jeans, and the price tag on it, believe it or not, is $100. So the fair tax is inclusive. What that means is when you get to the cash register, you don't pay $100 plus 23% or $123. No, it's included in the price tag. And when you check out, what you'll see on the receipt is $77 went to the store and $23 was collected for federal sales tax. Right? So new good. On business-to-business transactions, they are not, the fair tax is not levied on business-to-business transactions. So here's a great example. A home builder. Home builder is a business. They have to buy a whole bunch of inputs to build a home. Land, wood, concrete block, wiring, paint, the whole bunch of other things. And when they spend money, so these business expenditures, the fair tax, they're not subject to the fair tax. So they build this home, and when they sell it to the consumer, it's considered a new good. And the consumer who purchases this home for the very first time will pay the fair tax on it, and the fair tax will be inclusive of the price of that home. And when the home builder gets it, when they receive the money, then they'll set aside 23%, and they'll send that off every month to their state sales tax bureau, who will send it on to the Department of the Treasury. Yeah, now when that homeowner lives in that home, it's now considered a used good. So when they go sell it again, nobody else forever who buys that home again will ever pay the fair tax because it's considered used. That's it. So let's look at some more benefits of the business and trade here. I've already talked about at a high level the fact that we're going to really inspire individuals and businesses to continue to grow and expand, because there's no constraint around that financially as it relates to tax burden. And as it relates to business and trade, so here's something that is really useful and like to our economy. So you've got an estimated $120 trillion in global wealth. These are individuals from all over the world that live all over the world of every nationality, and they put their money in offshore banking centers to shield it from U.S. and other countries' income and capital gains taxes. Well, when the fair tax gets implemented and all personal and corporate income tax goes away and capital gains taxes go away, that money starts to flow back into our economy organically. Like, we don't have to go to the Department of the Treasury and print, another $1 billion and put it into circulation and risk inflation. No, that money comes back in organically. Why? Because, again, wealthy individuals and business owners will do with that money what they can put it to use in a way that is most highly leveraged, and that is to reinvest it back into their businesses or start new ones. So it's estimated that $1 trillion will come back into our economy in the first year organically. That's pretty amazing. And so when you think about this, so take that, plus the U.S. becomes a corporate headquarter haven. So our corporate tax rate will be 0. So international corporations will look to relocate here. We'll be the most tax-friendly nation in the world. And this isn't small. There's something that's been in the news over the last couple of years called inversion. You may have heard of it. And inversion is where U.S. companies relocate their international headquarters, their corporate headquarters, to more tax-friendly countries like Ireland, because they save, millions of dollars a year on tax rates. And of course, Trump has said he'll, really going to clamp down on that. Well, man, when companies relocate their headquarters over here, you're going to have massive infrastructure building, like new corporate headquarters are going to go up. So construction boom to the economy and a whole lot of jobs, right? U.S.-based human resource assets that will be hired to staff these new locations and the expanding businesses. I mean, it's really incredible what's going to happen. And the underground economy, it's a couple $1 trillion. They pay their fair share every time, somebody who's avoiding paying income taxes right now in any capacity. Man, whether they go to the store to buy a loaf of bread or a new pair of jeans or a computer or a cell phone or a sports car or a home or whatever it is, it's like, man, yeah, we broaden the base, right? Everybody pays their fair share. And we've also got a piece of legislation written into this that really supports lower income Americans. And we'll talk about that. So we've got some incredible reasons why the fair tax will be a boon to our economy. And it's just really efficient. It's a smart model. So we've got 45 states right now that currently collect a state sales tax. We leverage that existing infrastructure to form state sales tax bureaus, and those bureaus will be responsible from collecting from 18 million businesses versus 120 million households. So we think about that, we get 80% more efficient instantly when we implement the fair tax. Like, that's really smart. Only one form to fill out. What were your gross revenues? You multiply your gross revenues times 23%. That's your taxes that you owe as a business. That's it. This is just, simple and smart, efficient and simple to collect. So the IRS, when you think about what we've got right now, it costs $13 billion to run. They only collect about 75% of what it should, and the fair tax would eliminate the IRS by instigating sister legislation that would repeal the 16th Amendment. So when the need to collect income taxes goes away, the IRS will go away. So man, it's a really smart piece of legislation and just makes so much sense. Like, every single individual and business benefits from this, and so does the government. How do they, this is revenue neutral in year one. So in other words, fair tax gets implemented. By the end of the first full year, federal government will have collected the same amount of money that they will have collected using our current tax system. And then after that, as the economy grows, they're going to collect more. Everybody wins except a small minority. And we'll talk about that. Yeah, so your privacy gets protected. Like April 15th, tax day, we like to say, just becomes another really beautiful spring day. Nobody's looking into your personal financials, or we should say the government isn't. You pay your taxes when you make purchases. There's no more filling out detailed income tax forms, which as a self-employed business owner, that's when I first learned about the fair tax, I thought, gosh, if this does nothing for me financially, which it does, we'll talk about that in our special topic, but I don't have to think about tax implications, and then come tax time, I don't have to spend hours upon hours gathering receipts and filling out complex forms. Like, dude, that's incredible. That's a win. I get to invest all of those hours being creative in my business. So instead of there being winners and losers in our current tax system, i.e., if you are well off and well connected, you can pay money to expensive lawyers and tax accountants who will figure out how to dramatically lower your effective tax rate. Yeah, most people can't afford that. So they just are subject to what it is. So we've got a lot of fairness. So we've broadened the base. We said that earlier. Everybody pays their fair share, and we've got a piece of legislation here called the prebate that assures no one pays federal tax up to the poverty level. So what does that mean? What that means is the prebate will actually reimburse all qualifying households for the fair tax they pay every month up to the poverty level limit of spending. So here's what that looks like. So when you look at this chart, if you look at the right-hand column, take your average 2-adult household with two kids. So move your eyes down to the green section. And the Department of Health and Human Services has created a poverty guideline report, and it suggests that if you got 4 people in your family and you're spending about 32 grand a year, that's about spending at the poverty level. In other words, you're spending just enough to get by to, likely cover rent, or your mortgage, pay for food, medical supplies, fuel for your vehicles, maybe put some clothing on your back. And so if you take that annual consumption allowance, or another way to say it is a spending threshold, as defined by the Department of Health and Human Services, and you multiply it by 23%, the fair tax rate, the annual prebate, the annual taxes you will have paid on spending is $7,470. And if you divide that by the 12 months of the year, what will happen is every qualifying household, those with a valid Social Security number, will receive via direct deposit $623 in their bank account at the beginning of each month. So you're reimbursed in advance of the month for the fair tax monies that you spend when you go out and spend money. It's really smart. It's a really brilliant component to this legislation. Now look, this doesn't matter if you make $1 million a year or you're, just struggling to get by and, you're bringing in exactly as much as is going out. So it creates fairness that way, and the people who earn a lot more and spend a lot more on things like, fancy cars or vacations or clothing or dinners or what have you, yeah, they're going to spend a lot more in taxes. It's progressive that way. Really, really smart. So an important thing to say here is the fair tax's impact on prices. If you're with us for the first time, it would be really understandable to think that if the fair tax rate is 23%, that must mean businesses are going to raise their prices by 23% on all their products and services to compensate for that. However, that's not the case. And the reason why is because right now, as a consumer, we pay both income taxes and, in a way, we pay a sales tax in the form of us paying for businesses' income taxes. What do we mean by that? Well, if you go back to that example of going to the mall and buying designer jeans, when that business puts a price tag on their clothing, there's a lot of factors that go into it. And one of the line items that they factor in is, what does it cost to comply to the federal tax code, and how much are their actual taxes? And those go in to their financial model as line item expenses. And so ultimately, when consumers buy things from businesses, we ultimately pay that company's income taxes, business income taxes. So we call that the embedded tax, and it's equal to approximately 22% of all expense in the retail sector. It's a lot. So what happens is the embedded tax gets eliminated, right? Because corporate income tax goes away, and therefore all the costs to comply to the income tax go away. So that 22% goes away, and then the fair tax of 23% gets added. Now, it's not equal, it's not a wash. However, we expect prices to increase by somewhere in the neighborhood of 10 to 15% in their first year. And then businesses that want to compete on price will begin to lower their prices. And we expect after a few years that prices will come back down to pre-fair tax levels. So after about maybe 3 to 5 years, you're going to have no income taxes, and you're going to have prices that are the exact same as before the fair tax got implemented. And you're going to keep 100% of your paycheck. It's just like, it's incredible. So, yeah, we've rolled back the 7 key components that create drag on our current economy that we showed you up front. And if you think about that, you got to scratch your head and ask yourself, well, if this is good for everybody, including the federal government, like why hasn't it been implemented? Well, because you've got some small-minded people getting in the way of it. And these happen to be the very people that are responsible for legislation in our country. So 50% of lobbyists, tax lobbyists, they get paid healthy salaries, like 6 and 7 figures, to lobby Congress to manipulate the corporate income tax code that benefit their corporate clients. And when the fair tax gets implemented and income taxes go away, they're out of a job. So they don't like it, and they have influence. Politicians don't like it because with a 75,000-page tax code, they can find crafty, manipulative ways to pay for projects in their districts. And the public is none the wiser. They just rewrite some of those 75,000 pages. We never know about it. So, man, like when you see a politician who says they're not for the fair tax, you got to recognize that is out of self-interest. I promise you. Or it's because it's a really convenient and easy way to demagogue a political opponent by saying, yeah, my opponent supports tax legislation, and they want to raise taxes by 23%. Yeah, of course they're not going to say that, oh yeah, by the way, all income taxes and capital gains and FICA and all of these things go away and you get to keep your whole paycheck. So something to think about when you go vote. And that being said, we have something that we want to ask all of you. Since what's going to take this thing across the finish line is a grassroots effort and enough people speaking out to their elected officials and making a difference with their vote, we want to launch a poll here that asks the question, how important is the fair tax when you vote for your federal elected officials? Is it at the top, like it's the most important thing? Like if they support the fair tax, they'll get your vote? Or is it, it's important but not at the top, or it's just not important at all? Yeah, so go ahead and vote. And we'd be real curious to see where we land. So look at your screen, click on which it is, just make a decision. We're going to close this out in 5, 4, 3, 2, and 1. Put in your votes. All right, closing the poll. Great. So about 2/3 of you said, yeah, it's most important. So look, you got to know that, man, like if we vote in elected officials that are co-sponsors of the fair tax, like it's the best thing that we can do. It's one of the most impactful things that we can do. Yeah, so thank you for voting. It's interesting. Let's look at some questions here. I'm going to unmute my colleague Larry and invite him to come back onto the line, and let's tackle some of your questions.
Okay, Mark. Mark, there's a couple of alerts on the screen. I thought they were mine, but it looks like they're coming from you.
Was that right? Oh, good. Thank you, Larry.
Clear it up.
All right, so Jim writes in, what excuses do politicians make for not supporting the fair tax? Well, you know, anything anything that they want. You know, I gave you a couple of, or probably the biggest one. It's just really convenient for them. You know, what else could you contribute to that, Larry?
Well, the one I hear the most, which is the most ludicrous and most frustrating for me, is that because I've asked, what is it specifically that you don't like about the fair tax that prevents you from supporting it? And the answer is, well, I just prefer a flat tax, a flat income tax. And of course, today we're not even talking about a flat income tax. I've not heard any logical explanation or reason why any congressman or senator who opposes the fair tax will give me as to why. So I don't have an answer for that question, Mark.
Yeah. Yeah, and I think part of it is an education issue. Like, man, if I could get the damn Congress in the room, like, and really take a couple of hours to be with them, like, I promise you I could win many of them over. And I just have a strong sense that most of them don't know about it, or don't know enough about it, or think they know about it or enough about it, and they make some snap decisions, and yeah, they're operating on misinformation or not enough information or no information.
Yeah, I'm more inclined to believe that most of them, Mark, just don't want to get rid of the income tax, and they cannot offer a reason why they would be opposed to the fair tax. They're just
Yeah, that's
dumbfounded
fair.
with that question.
Yeah. Yeah. Thank you for the question, Jim. We appreciate it. Yeah. So Josh wrote in, thank you for your comment, Josh. Ted Cruz, Bernie Sanders, and CNN moderators in last week's CNN debate on taxes must love the status quo because the fair tax was never mentioned. It's a great thought. It's true.
That's why you don't hear anything about it in Washington, D.C. these days. We haven't heard anything. We have not heard the fair tax mentioned since sometime back in March or April. They don't want it to come up because if it comes up, they know they're going to lose.
Yep. Yeah, Jim asks about, does the fair tax require that retail receipts show the fair tax? I actually don't know. Is that accurate, Larry, that yes, they do?
Yes, they do. It's in the legislation.
Yep, perfect. Thank you. Hey, Carrie Bowers is with us. Carrie, thanks for being here. We appreciate having you. So Carrie wrote in it's actually worth saying, Carrie Bowers courageously declared himself eligible for president of the United States in this last election. He's a brilliant man, and we would actually be served having this man at our helm. And he's with us here tonight, dedicating his time. So thank you, Carrie. Carrie wrote in, the president has proposed a 12K/24K, 12,000, 24,000 deduction for individuals versus married couples. And note that the prebate provides the same for an individual and married couple. His proposed child credits are roughly the same as the additional prebate provides for additional family members. Yeah, it's great. Carrie is very well versed in the fair tax. Kevin writes in a unique question, Larry. Are there any resources for Canadian versions of this?
Not that I am aware of. And to be honest with you, if somebody from Canada asked me for information on it, I would respectfully decline to offer that to them. The last thing we want, folks, is for some other country to implement a fair tax before we do, because if they do, then they will have that big financial vacuum to suck up all of the corporate headquarters and all of the foreign financial investors, and we'll be really a third world country.
Yeah, yeah, and that just might be what it takes. Might be that somebody does it and like their economy starts to take off and then we can't ignore it anymore. So Frank wrote in, he voted the fair tax is most important because it deals with so many other things as well. It's a great point. Thank you, Frank. You know, one thing that the fair tax handles powerfully is Social Security and Medicare. Like it's no secret that these programs are running out of money fast. And as the economy grows under the fair tax, written into legislation is it will have essentially a separate bank account for monies to put into Social Security and Medicare coffers. And as the economy grows, like the federal government will generate the revenue it needs to keep these programs going. Like, my gosh.
You know, for a long time, the funds for Social Security and Medicare have been going into the general fund. That was as the result of legislation that President Clinton implemented or had implemented. And people have wondered why, after all of these years, has not the revenues for Social Security and Medicare been invested so that it could grow some value rather than sitting dormant? Well, one of the reasons is, as I see it, is because if it were invested, it would be captive and the Congress would not be able to tap those funds for the general fund. Mark?
Yeah, thanks, Larry. So Gray, thank you, Gray, for writing in your question, wrote, which representatives support the fair tax? And correct me if I'm wrong, Larry, but you can go to fairtax.org and look up the congressional scorecard for the fair tax. Is that where it's located?
That's one of the places.
Okay.
That's good enough. You get there, you're at the source of all of the research paperwork that was done by those professors you had mentioned, and as well as additional paperwork that deciphers some of the gobbledygook in those financial reports. And there's a wealth of information there, in addition to a link to, I think it's the government's printing office.
Yeah.
That you can just look up the HR 25 or S118 and get the co-sponsors and sponsors. Right now, as of today, we have 45 co-sponsors in the House and 6 in the Senate. Mark?
Yep. Thank you. So Wesley writes in, can you talk about the fact that the fair tax only applies to the purchase of new items and also excludes medical bills? Well, that's actually not accurate. So when you think about a service, every time a service is performed, it's essentially happening for the first time. Like it's considered new, like every time a service is performed. So yeah, I'm not actually sure what else you'd like us to talk about here, Wesley. Yeah, Larry, what light would, in addition to what I've shared, would you shed on this?
Well, the first is the principle. There are no exemptions to what is taxed under the fair tax other than the used goods that Mark already talked about and the fees for education, be it K through 12 and so on, or seminars, workshops that you might go to for your job advancement. Those are the only things that are not taxed under the fair tax because they are considered investments in human capital. The medical industry happens to be one of a few that are at the highest cost of embedded taxes and compliance costs in the nation. They're over 25% by some fraction, but a lot of that goes away under the fair tax, as Mark mentioned, and then the fair tax is added. So once again, medical costs will go up like everything else, 10, 12, maybe 15%. But don't forget that if you're in the average income bracket under the income tax today, under the fair tax, you'll realize an increase in take-home dollars of 29.28%. So you've got more disposable income under the fair tax, even though retail prices are going to be a little bit higher. Mark?
Yeah. Yeah, thank you. Another question comes in, isn't the repeal of the 16th a prerequisite for the fair tax? Not a prerequisite. It's just something that has to be handled in tandem, if you will, Gray. Yeah, so anything else you'd say about that, Larry?
Yes. It is not necessary at all that the 16th Amendment be repealed. It is desired. And there's a safety valve on that also, so that we are not trapped with both an income tax and a fair tax. In the first place, when the fair tax legislation is passed, it literally abolishes all of the income tax code. So there's nothing for the IRS to enforce any longer. Okay? The income tax is gone, the fair tax takes its place. There's a sunset clause in the legislation that states if after 7 years the 16th Amendment is not repealed, the fair tax is automatically repealed, and at which point the Congress is going to be put into the unholy position of having to recreate some kind of a tax system, be it income tax or what have you. Mark?
Yep. Yeah, our Canadian friend Kevin has written back in, are there any countries that you're aware of that are close to implementing this? And I'm not aware of it. Are you, Larry?
No countries that I know of, although I do know that at one point Brazil was trying to get information on it from Neil Bortz, and he declines to meet with them. I don't know if they have pursued that any further or not. Mark?
Yeah, so a question has come in about state taxes. The fair tax deals only at the federal level and generates revenues for the federal government. Whatever states are currently charging a state income tax or a state sales tax, the fair tax has no impact on that. However, likely states that are operating with an income tax it's a good safe bet that many of them will follow suit, eliminate that, and start charging a state sales tax or potentially increase their state sales tax. So there's a question about 401k and IRA, and that would be a good segue to our special topic. So let's touch on that, and then there's a bunch of more questions. So stay with us, guys. This is great stuff. Thank you for being so engaged. We really appreciate you. So what we talked about for our special topic tonight is how the fair tax puts you in a better financial position. So, you know, a lot of these have come out during the presentation, but we really wanted to highlight them for you so you could see them all in one place. And here's the thing, think about this for yourself. Yeah, so think really micro here. Like, think about your current situation and ask yourself, does the fair tax put you in a better financial position? So just got some bullet points here to share with you. So number one, no more income tax withholdings or FICA tax, Social Security and Medicare, right? So you keep 100% of your paycheck. Now, I'm aware there's some retired people on with us tonight, and that's great. Fair tax benefits you as well. We'll get to that. But for those of us who are still in the world of working, if you know, I don't know what the median income is in this country, but let's just say it's 60 grand, $5,000 a month. And you know, everybody's withholdings are going to be a bit different based on the number of kids and things like that. But let's just say that your take-home pay is $3,800. Like, look, when the fair tax gets implemented and your take-home pay goes from $3,800 to $5 grand, and you get to keep 100% of your gross pay now becomes your net pay. Like, that is significant. Like, that is a, not doing the math in my head, but it's a better than 20% increase instantly in your income. Like, that is remarkable that that happens overnight. And what will happen with that is that that increase in wage will be saved, it will be invested, and it will be spent. More likely, given the nature of our country, the latter, and that's good for business. So take home 100% of your paycheck, no more capital gains taxes. We've said this. It's like, man, like, you know what that's going to do to the stock market? It's just like people will be buying and selling. There'll be more of that, and there'll be more activity and more money invested in the stock market because of it. No tax penalty on tax-deferred investments. So 401k contributions and traditional IRAs, for example, these are a couple of investment vehicles that you put pre-tax dollars into these investment vehicles, and then when you take the money out for retirement, the money comes out and it's taxed. Well, now when you take the money out after the fair tax is implemented, there's no income tax levied. It's a windfall for some of you. There's no more estate tax, and of course the prebate. You get dollars, hundreds of dollars coming into your household every single month. It's like money in your pocket, real. Especially after 3 to 5 years when prices come back down to pre-fair tax levels. Like, it's just a big deal. Yeah, we forgot to put in here that you can buy used goods. So you don't pay taxes on used vehicles or homes or, bigger ticket items like that. So bottom line, where your income comes from does not matter. There's no taxes unless you spend it on new goods and services. Yeah, so you could actually do the math on this, and we didn't choose to put a hypothetical example up here, but you could look at what you paid in federal tax, and what a useful exercise it would be to look at what you spent over the course of the year, and all of your income taxes you would keep. Take 23% and multiply that times your expenditures, factor in the prebate, and see where you come out. That alone is going to put you out ahead, not to mention the bigger opportunity. Like, businesses are going to be opening up and expanding, and it's going to be the most incredible business and economic friendly climate we've ever seen. So forget, even though, at the end of the year, you're going to have more money in your pocket, like, man, the opportunities are going to be grander. That's what excites me.
Hey, Mark.
Yeah.
Something that we haven't talked about, and most people don't realize, or they don't relate to it, is that with the job growth and the economic growth in general of our nation, our pension plans will grow faster than they are under the income tax. Mark?
Yep. That's a great point. Thank you, Larry. Thank you. All right, let's take some more questions. Larry, you got any that you could pull up?
Oh yeah, there's a bunch of questions here. I'm excited to see this much participation. You looking for me to choose? Well, you left off with the one of the ramifications to the 401k and the IRA that Gray asked about, and I think you touched on that a little bit. But simply said, under the fair tax, if you've got a pension plan, a qualified pension plan that you were participating in prior to the implementation of the fair tax, you won't be being taxed on that when the fair tax is in place and you finally take distributions. So that's a big benefit. Beyond that, there is no need to have these special types of funds any longer. And with the income tax out of the picture, the investment uh, the investment complexity goes away. And now our financial advisors can spend their time researching what businesses are really doing and where the markets are the best to invest your money or to advise you to invest your money, rather than looking for the best tax deductions and then to see what's available in the way of investment growth. So it's going to be a benefit to them also, since they don't have to deal with the tax code any longer. Mark?
Yeah, thanks, Larry. Yeah, thank you, Gray. So another question came in. Will the passage of the fair tax only work, Larry, if the states request an Article 5? So are you
No.
aware of an Article 5?
Yeah, well, he's referring to an Article 5 convention of the states. They are two separate things. The Article 5 is a federal activity where the states can request, they can demand that Congress schedule a constitutional convention of the states as opposed to of Congress, and force legislation, force ratifications, not force ratification. They can force recommendations for changes to the Constitution. That's not going to be necessary for the fair tax to be implemented. It would be necessary to go that route, and a lot of people feel that that's the way to go now because we're not getting the response from Congress that we deserve. And if you know of a group that's doing Article 5, be sure it's one that's not just a fly-by-night operation that's trying to, there are people out there who will create organizations for a particular issue, if you will, only to diverse or to diffuse the activity of those who are focused on things that are important to them that they don't want passed. So it's a means of distracting a group of people from the fair tax, for example, to go after this Article 5. The Article 5 is a good thing, but we should wait until at least Congress makes its move right now. If Congress passes an income tax, then I said go for an Article 5 because we've not been successful in being able to get them to do our will. But if we can get to them now and they will consider the fair tax, if it gets a vote, if it goes to the floor and it gets a fair up or down vote, we can be satisfied with that, and we'll learn from it and take it to the next step during the next sessions of Congress. But meanwhile, we're stuck here flat because we're not getting the results, and we're working like crazy, and we just need more people in this country to be aware of the fair tax, and that's where you folks come in. You've got to be able to spread the word more. Mark?
Yeah, thanks, Larry. Kerry Bowers has written in some useful info. I want to share what he's written in on a few things here. So he says the president's plan closes no doors to the 400+ annual tax code changes that occurs today. So think about that. Today, every year, 400+ changes are made to the tax code. We never know anything about it. It would not be wise to return business headquarters or operations from overseas, nor repatriate foreign earnings. Yeah, thank you, Kerry. So the other thing Kerry wrote in, to go back to the medical expenditures, he says you only pay the tax on medical deductibles. Your insurance premium will include the tax and paid for your expenses by the insurer. So in other words, you're out of pocket on a per case by case basis is your deductible, and that is what you're paying at point of sale for each medical issue that you have. And once your deductible is covered, the insurance company is paying the rest of it. Thank you for that. Let's see. Yeah, Randy wrote in, thank you, Randy. India passed a goods and services tax that does replace a small amount of other taxes, but not all of them. And Kerry wrote back saying, yeah, there isn't a country that has a pure sales tax revenue model. All right, so Larry, explain to Greg, just to reiterate what we said during the presentation. He asked, why would retail prices go up about 10 to 15% if tax compliance costs, which are 22%, the embedded tax, go down by 22%, and the fair tax is 23%. So in other words, he's thinking that it's, kind of neutral right there. So why would it go up, prices?
That's a great question, Greg, and the answer is a little complex, so try and follow me. Part of the embedded taxes now are the taxes that are paid, the withholding tax and the FICA taxes that are paid by the employee. They're part of the business's cost of doing business. Okay, now if you can follow that step, the next one's a little bit easier. When the fair tax is passed, and they are no longer withholding that income from you, you're still getting the income. So it's still part of the cost of doing business. In other words, that's an amount of money that cannot be used to lower the costs of the goods through the supply chain. So we can't say that the costs are going to go down by 22 or 23%. They're going to go down by maybe 12, 15%, 18%, something in that area. It's such a complex issue, we can't even calculate what the real numbers would be. In fact, the Ways and Means Committee has just discontinued the idea of having a border adjustable tax in order to reduce the income taxes from our exported goods. And the reason is it's so darn complex in the system, there's no way to calculate how much that tax would be on a per item basis. So we have the same thing with adjusting the fair tax into the system. So we say, okay, we make some presumptions, some swags, if you will. The cost of goods through the supply chain will go down maybe 15%, and then the 23% gets added, and you'll find the new retail prices 10, 12, or 15% higher. And I don't recall exactly where those numbers fall right now. But that's why it's not a clean wash. If that doesn't come across clear to you, Greg, write us again, and I'll see if I can think of another way to propose my answer. Thanks. Mark?
Yeah, so there's a question, how does the fair tax reduce the debt? It's a great question, and the answer is, hey, let's tackle one big issue at a time here. So first of all, it does half the job. The fair tax is about generating revenue for the government in a revenue neutral or better way that puts our entire country and its citizens and businesses in a better place, in a more efficient place than it is today. And it does an incredible job of that. And it generates more revenue as the economy grows. So it'll generate more revenue, but the legislation doesn't seek to rein in Congress's overspending. That's different legislation. That's like another issue to tackle. And the fair tax doesn't write that into the legislation. So it's like one thing at a time, and the fair tax can, really make a difference as it helps grow the economy. All right. Josh asked the question, Larry, is there a fair tax calculator app? I'm not aware of that. I don't think there is.
I think there is one or two fair tax calculators out there. The last one that I've tried, I found out was inept. It's good if the person who is using it doesn't have any expenses for a business in their home. There are deductions that people who have businesses in their home can take that are not available to somebody who has a standard 1040 tax return. And those calculators do not take those deductions into account. Otherwise, they're pretty good. There's one from a gal in Pennsylvania, and there's one from a guy who uh, wrote a book recently, and I can't recall the name of it. I guess maybe it's been a year ago now. Uh, but he's a good fair tax advocate, and I believe he is also a financial planner. And I just can't come up with the name of that guy right now. But there is a couple of them around there. I just don't know where to send you, Mark.
Yeah, and yeah, so I've seen some calculators out there, but yeah, I don't know that they do the job. I think there's too much risk in it. In other words, Carrie actually wrote in, there's so many variables to compare one to the other. It's not like really effective to use.
Okay, Randy just wrote in, John Gaver is the gentleman who has the calculator, and he's the author of the book, The Rich Don't Pay Taxes, or Do They? And you can look up John Gaver on the web, I believe, and get to his website. Unless Randy's going to pass that along in another message. Thanks, Randy.
Yeah, I'll send that out to everyone. Yeah, thank you, Randy. Larry, any fair tax paid on loans?
I'm thinking about that. Go on to another question. Let me think about that a little bit.
All right, I'm sure we'll get some help from our experts that are on the line with us. So Gray writes in, when you've heard about there's no fair tax levied on used goods, and the comment/question written in is, so I'll never buy a new car, new house, or new boat. I love this. I love when people write that in. And my response to that is, what country do you think you're living in? This is a country of people loving their toys. Like, are you serious? Like, man, people are going to have more disposable income than they've ever had in their lives. And, at the end of the day, and I'm like being tongue in cheek here, Gray. It's a great question/comment. And from this man's opinion over here, this is a country of consumption, and we spend, and we like to buy things. And most of us, and there's been a lot of research on this, most of us buy for quality. Like, if we see quality, we will spend the extra dollar for it. Yeah, so you combine that research with more money than we've ever had before, and it's like, no way, man. Houses, boats, cars, like, man, it's just, I foresee, and I'm no economist, but I've done the research. Like, gosh, what an economic boom this is going to be when the fair tax gets passed. It just lights me up to think about. So, yeah, you can absolutely count on the auto industry and the housing industry loving this piece of legislation.
Gray, what's going to happen is there's going to be a little bit more competition between new and used, and those businesses, builders, developers who are selling new homes, for example, they're going to put some incentives into that package that they're not putting in there today. For example, they may wire the entire house for internet. That's high speed, that's high speed technical wiring. Or they may put in a large screen TV along with that. There's lots of things they can do, lots of little add-ons that they can embed in there to help make the house more desirable than an equal house that does not have those capabilities. But I want to say this to you also. The item you buy, be it car, boat, or house, or airplane, okay, depending on whether you're purchasing on the value of the purchase or on the emotion of the purchase will depend on what you're going to buy. And if you're emotionally tied up to a brand new spanking Mercedes, you're going to buy a new one in lieu of a used one. And unless you can really afford that financially over your lifetime, you're going to end up broke. Mark?
Yep, it's great. All right. Let's see. So yeah, we've gotten some of our great supporters and experts to answer the loan question, Larry. So yes, the fair tax is levied on the servicing of the loan. So
Right.
that actually speaks to like right in line with the legislation. Like you pay fair tax on new goods and services. Well, when a loan is serviced, when that service is rendered, then that's what you pay. That's what you pay the fair tax on, which is like a fee, if you will, built inside your loan every monthly payment. So yeah, small amount there. Thank you guys. Yeah, people will wait in lines for weeks to be the first to buy the next Apple iPhone, Carrie says, with all their new money. That's right. It's great.
They're waiting in line for it now without the new money, aren't they?
That's right. Yeah, it'll just be longer lines. Josh wants us to point out that if you live in Minnesota, tell Dick Gephardt, who is the last Democrat apparently to support the fair tax, to run against Al Franken. It's great. Put the pressure on. We need Democrats. That's absolutely the truth. Kevin asks, are there loopholes, like if you implement it in the States and people go shop for things cross-border, or does the drop in price in products and services make it not worth it? So I think what Kevin is saying, hey, people are going to run to Canada to start buying things to avoid the additional higher prices. I mean, I don't see it. I don't know.
Well,
It could happen.
hey, it doesn't matter. They can buy it from any place they want. When they come into the border, Customs Service is going to tax them on it unless they can show that they have a tax-exempt business and it's for resale.
Yeah. Yep. Great. Thank you. What else do we have? We got a few more here. Thanks for hanging with us, and thanks for being so active, everybody. Gray wants to know, what is the time frame for passage for this thing? What's realistic?
Until he added what's realistic, I was going to say yesterday.
Yeah. Always the question of the hour, right, Larry?
Right.
Look, I love this quote. There's nothing more powerful than an idea whose time has come. And it's like the idea's here. We've got it. It's shaped. We've harnessed it. The legislation is brilliant. And we just need to get this message out. So, it can happen sooner rather than later, Gray. It just, how committed are we to it? That's the only question to ask. How committed are we to it? Yeah, so in that vein, I want to speak to something here, and I recognize there's a handful of other questions. There's a way that you could support this. So there's a number of ways you could be in action. So you could email President Trump. We got a website for you there. We got popbox.com. It's a brilliant website that lists all the legislation in Congress, and you can create a free account. Go there and click yes, you support. Like, this is, this is a way for people to have a voice. Politicians look at it when these issues get enough noise from people in their district. They really look at it. Write, email, phone your congressperson, and then make a contribution and join the 1040 Club. Like, this is a simple thing to do. So what you do is you go to fairtax.org, and you go to the end under donate, and you join the 1040 Club. Yeah, and that's simple. It's like, that is contributing $10.40 a month. You gotta, instead of just stay home from Starbucks twice a month. That's it. That's it. So look, here's a call to action. Like, you see how it says get involved in that website? Go to this website, click get involved, find something that aligns for you. Go invest your time, and go to donate and join the 1040 Club. Like, if what we've said here tonight aligns for you, and you can recognize that while it may not be perfect, it's much better. It's much more advantageous than what we've currently got. Go put your money where your mouth is. You're talking to 2 people, 3 people with Elaine and Ron and, several other of our experts that are on the line that have already done it. It's $10.40 a month. So I want to inspire you and challenge you to go do that. And I want to take the pulse of that. Like, based on what you heard tonight, can we count on you to join the 1040 Club? We have a poll that asks you if you'll do it. And it's anonymous. We don't know who you are, so just be honest. If it doesn't call to you, then don't do it. But if it does, go right after this thing and go do it. So go ahead and put in your vote. We just would love to see where we're at. We've got dozens of people on the line tonight, and we'll see if we can add any contributors. Yeah, look, and what happens here is Americans for Fair Taxation, the money goes to this organization, and it goes to creating campaigns where we make the fair tax visible. Online campaigns, physical campaigns by certain areas of the country by supporting candidates that, or advertising where in districts where there's candidates that support the fair tax as co-sponsors. By creating money to have professional lobbyists, like actually go and lobby in Washington. Yeah, so that's what we need the money for. So about half of you said you'll do it, and half of you won't. That's great. Yeah, thank you for your contribution. We appreciate it. All right, handful more questions, and then we'll round it down for the night. And you guys have been great for staying with us. All right, where are we at here? Mostly comments here.
All right, Randy has piped in again on the on John Gaver. He publishes with Allegiance Books. Allegiance Books. So if you go to Allegiance Books, you can locate John Gaver. Mark, thanks, Randy.
Fair tax widens the tax base. Yep, Frank, thank you. We talked about that. Calculator being worked on. Time frame is now, no doubt. How soon it happens depends on we the people. Get off our butts. Thank you. That's no question. Contact the co-sponsors. It's about restoring freedom. Freedom isn't free. It's a great point. Thank you. Yeah, great. Thank you for your comments, everybody. We've exhausted all of it, and you guys have been great tonight. Thanks for being with us. I want to just really acknowledge all of you for being here, especially those that have come back over and over, especially our experts who help Larry and I, and more than anyone, my colleague Larry. We've been doing this together for 9 years. You're amazing. You're committed. You're just an incredible human being, and I love you. Thank you for being my partner.
You're welcome, Mark. Thank you.
All right, everybody. We will take the next 2 months off due to Thanksgiving and Christmas, and we'll be back with you in January. And we honor you for taking time out of your schedules to get educated. Go to fairtax.org. Go to flfairtax.org. And communicate with your elected officials. Be in action. Supported financially. And let's keep up the fight.
If you're not getting the Fairtax Friday newsletter, it means for some reason you're not registered with Americans for Fair Taxation. It may be because you've neglected to do that, or it may be because your name has gotten lost in the transition from one database to another, and some purging of what's supposed to be dead addresses along the way. If you're not getting the Fairtax Friday newsletter, please go back to fairtax.org and register yourself again. It's very important that we build this database and of supporters, and that you also share the word of this wonderful idea, because this nation's life is really at stake. Either we're going to let the corruption in Congress take us down the tubes, or we're going to beat them back. And the last thing I'll leave you with is keep your muskets oiled and your powder dry. Good night, Mark.
Thanks, Larry. Good night, everybody.